Money Desk Soap and Crew, and today the financial press is chanting one number: $112 billion. Alphabet, Google's parent, just reported the biggest quarterly profit any company has posted in the history of companies. And the record profit headlines wrote themselves before the earnings call ended. This desk taught you a rule 2 weeks ago about a different set of market claims. Check the statement, not the speech. Today's version reads, check the filing, not the headline. Because inside this filing, the biggest profit in history is mostly not money. First, the number itself, because it is genuinely real. Net income for the quarter? $112.1 billion. That is not a typo, friends. It is more profit than any corporation has ever reported in 3 months. It blew past every analyst estimate, and if you stopped reading at the press release, you would conclude this was the greatest operating quarter in the history of commerce. Now open the filing, because accounting has a story to tell. Here is the composition, and the chart says it faster than I can. Operating income, the money Google's actual businesses earned by selling things, was $40.77 billion. Excellent. Also, nowhere near a record headline. The towering difference between that and $112 billion is dominated by unrealized gains, the marked-up paper value of Alphabet's stakes in private companies, chiefly the AI firm Anthropic, whose valuation surged after a funding round from about $380 billion, plus SpaceX. For scale, friends, the comparable equity gain in the same quarter last year was $1.2 billion. The record is real. It just was not earned. It was marked. What does unrealized mean in kitchen table terms? It means no dollar moved, nobody bought anything, nobody sold anything, no customer paid a bill. A private company that Alphabet owns a slice of got a higher price tag in a funding round, and accounting rules translate that higher tag into profit on Alphabet's books. It is your house going up on a real estate site, booked as salary. And it swings both ways, friends. If that private valuation comes back down next quarter, the same rules print the reverse. Paper giveth, paper taketh away. Credit where due, because the desk deals it straight. The actual quarter underneath is strong. Revenue came in just under $120 billion, and Google Cloud grew 82%, a monster number in a business that size. If Alphabet had led with that, the honest headline writes itself. Great quarter, cloud on fire, $40 billion earned. Notice that nobody needed to inflate it, friends. A $40 billion quarter got dressed up as a $112 billion one anyway, because record in history is a better headline than very good. And now the punchline the market delivered. On the night of the biggest profit in corporate history, Alphabet's stock fell nearly 5%. Why? Because investors read the filing, not the headline. The company raised its capital spending plan for this year to between $195 and $205 billion, and said spending will increase significantly again next year. Wall Street looked past the $90 billion paper mark like it was a coupon insert, went straight to the spending line, and sold. Whatever the headline celebrated, friends, the people with money on the table priced the cash, not the mark. The fair shake in full. Mark-to-market accounting is not a trick, it is the rule book. When a company holds stakes in others, the rules require booking valuation changes into net income, and Alphabet disclosed every layer of this plainly in its own filing. No one hid anything. The company reported what the rules demand. The claim on trial is not Alphabet's arithmetic, friends. It is the headline's translation. Biggest profit in history, delivered to the public as if it described earning power. The filing says most of it describes a price tag on a company Alphabet does not run, cannot sell overnight, and did not earn a dollar from this quarter. Why it matters past one earnings cycle? 2 reasons. First, the loop, and it deserves naming. Alphabet holds a stake in Anthropic, so when Anthropic's private price rises, Alphabet books a profit. In the middle of a boom, both companies are spending fortunes to build. Paper valuations feeding paper profits feeding boom headlines is exactly the kind of circle that looks obvious only afterward. Second, the public reads record big tech profit and reasons about taxes, about antitrust, about whether the economy is fine, off a number that is mostly a bookkeeping entry. Bad inputs make bad civic math, friends, and this input was 8 parts paper. Ledger it then. The record is real as arithmetic and misleading as a headline. $40 billion earned, the rest marked, and the market itself voted -5 on the night. So keep the Money Desk's rule where you can reach it, friends, because it now has 2 data points in 2 weeks. When a number sounds historic, check the filing, not the headline. If the profit cannot buy anything, it is not profit yet, it is weather. See you at the next shift. I'm Marcus, and this is Pixel Politics.